Crypto is evolving fast, from Bitcoin ETFs, AI, and tokenized real-world assets.
I'm Cheyne Kupfer.
I'm Mike Loder. This is Bitcoin 101. Let's break it down. It's good to have you back on the program. We'll be unpacking all of those things and a bit more today. And joining us to unpack the latest trends and challenges is Joe Fisher, coach at Crypto Calls, here to share his insights on where the space is heading. Mate, thank you so much for your time on the program. Cheyne, as always, good to see you. Let's start.
It's good to be back. It's good to have you here, Joe. So let's get right into it. Tell me a little bit about how this bull run has been characteristically different from the 2017 and 2021 moves.
Yeah, for sure. So I think 17 was sort of the real start of, okay, we have something here. We've got something that early adopters are starting to build on. You know, it's that ETH, it's ICO, it's things are starting to work outside of just Bitcoin. So we've got growth happening inside crypto, and you can do stuff with it now. You know, there's contracts and all sorts of weird things going on. The next one into 2021, sort of the next bull run after that, was that real age of NFTs, DeFi, and then it's once again further adaptations of what else can we do now? So it's so many more things that we can build on top of and start to use it for actual use cases in the real world. And now we've evolved through to all the way now to 2025, where we're starting to see that in the real world, in actual use case of businesses, whether it's for tokenization of assets, all sorts of different things that actually can be used on a day-to-day basis.
Let's touch on real-world assets for the moment and tokenization. How are they changing crypto use cases today? You did say we've adopted it far more than since 2017. Take us through a bit further.
Yeah, for sure. So something that's really special now, I think, about where we are with crypto and real-world assets, tokenization of those things, it means that we now have a verifiable way of having data on-chain so that you can see in its verified ownership for you. And that allows us to do so many different cool things, such as you can own music royalties on chain, you can own your property on chain, you can buy tokenized versions of property. So traditionally, you normally have to buy the whole house, right? Now you can buy pieces of that house and share that amongst 5,000 other people. And it's so much more liquid than, say, selling what your normal house would be if you were just to try and sell that straight away. Yeah. So many more different adaptations for real world assets now that can be plugged into the blockchain. And we see that working now currently in this market, and it's been phenomenal.
Absolutely. We're heading towards interoperability now. Cheyne, you wanted to ask this question, I think.
Yeah, so what is the main challenge in blockchain around scalability and interoperability?
You've nailed that word. I'm so proud of it. So, yes,
it's a hard word.
Interoperability and scalability. So what we're seeing as one of the main challenges with, I suppose, crypto is that there's so many different chains. You know, there's Solana. I'm sure people have heard of all sorts of things. Ethereum, Solana, Bitcoin, all this and all that. And unless you're in the weeds, let's say, right in there in crypto, you don't know how to use all these different chains. You don't know that you need gas fees, you need all these other things. So they're siloed. So if you're in the Solana ecosystem, you're sort of stuck in the Solana ecosystem because you've just got Solana. Or if you're in ETH, you're stuck in ETH because you've got this. One of the challenges I think we're going to have moving forward into the future is how do we make it so that it's so seamless that when I go downstairs here to buy, you know, a beverage or food or something like that, when I tap my crypto card, it doesn't matter what chain we're on or what my assets are in or anything like that. We can just use that to a point where it just plugs straight in, and we have that ability then to have it so that it's so seamless that we can use it for everyday transactions without having to think about it.
Yeah, it's certainly interesting stuff. And of course, as we move forward, it's only becoming more and more, everyday and mainstay. But how have Bitcoin ETFs impacted institutional adoption of this stuff? We see governments looking over, there's a lot of red tape. Let's talk institutional for the moment.
Yeah, so I think what's really cool about this is obviously previous it's sort of been, and if we say the Wild Wild West or for degens only or anything like that, we're seeing, you know, you can use institutional backing now with ETFs, obviously, to be able to participate in cryptocurrencies without sort of the pre-perceived risks from before. So when you plug in, we now have real backed companies that are managing top tier finance that are able to plug into those different ETFs, and you can use those now for whether that's ongoing things for your superannuation or all that sort of stuff. There are options there now that we see these institutional level finance companies plugging into, whereas before it's more been, like I said, really out there, really early adoptee.
Yeah. The people that want to spend time researching, learning it, the experts, if you will.
Yeah.
All right, so let's talk a bit about AI. How is AI coming into the space with trading, security, and smart contracts and alike. How is it affecting the crypto landscape as a whole?
Yeah, so this is, I think this is part of the new boom for 2025. Each part has had its own narrative. In 2025 seems to be really driven by AI, which is so interesting because how it plugs into so many different things. So there are different layer ones, for example, that use it for security, meaning that they use that to as a secondary checker, I suppose, on their nodes. And if you're not super up to speed with crypto, you're not really sure what that means. But so they use it to see if there's bad actors and whether their transactions level up, whether they're all across the same across different networks, to make sure that if there are bad actors, they're identified earlier and therefore prevent more scams and things like that. So there are blockchain layer ones using AI for that sort of thing as well. But on top of that, there's I suppose making it a lot easier for barrier entry as well. Yeah. So there are companies and protocols that are currently using AI to write all of the smart contracts, and that just gives you a lot easier base to start with. Obviously, writing tens of thousands of lines of code is very time consuming. So if you can accelerate that with AI and then obviously do your audits and checks after that, it just makes the adoption phase, I think, a lot easier for us to advance into the future a lot quicker.
Yeah, absolutely. Joe, I'm curious, before we round out the episodes today, I'm curious, is there some Bitcoin myths that you wanted to bust for us today, just before we finish? I feel like there are a bunch of them out there floating around.
Heaps.
Heaps. Take us through maybe one or two that you wanted to bust today.
Yeah, to try and keep it reasonably brief, because otherwise we could be here all day, but I think one of them is that everybody thinks you have to be a whole coiner. Like, oh, well, if there's only 21 million Bitcoin and they're worth 100,000 plus, how could I own one now? Like, the ship's sailed. But people don't realize that there are a derivative of a Bitcoin, which is called Satoshis or Sats. So it's just like, the easiest way to explain it was we have one whole dollar, and to break up a dollar, we have cents. Bitcoin also has its own version of cents, which are called Satoshis. So you can own a micro amount of Bitcoin as opposed to owning a whole Bitcoin. So you could own 0.0001 of a Bitcoin, and obviously the price is relative to what it was as a whole Bitcoin as well, in fractional value. And so I suppose one more to so a lot of, I think, people initially believed that Bitcoin was for the criminals, for the underworld type thing.
A dodgy scam.
Exactly.
We could exchange it, Silk Road. Yeah.
Exactly. So now we've grown so far past that, right? And I think it's very easy to trace Bitcoin's origins, where the transactions are. It's all public. You can go and see where everything exists, and it's so much more as a financial instrument, looking at a currency, so to speak, so much more transparent than anything else that exists currently, even from our top level finances for running a country, for example. So from that perspective, it's actually a really terrible way to run a criminal organization through Bitcoin, because you can see where everything goes. So debugging that myth, I suppose.
I think that's a really big one as well. Yeah, people would be looking at it and seeing those news headlines from back in the day where it was like crypto scam, rah, rah, rah. But as you've said there, the transparency is what sets it apart. Joe, I want to thank you for joining us on the program, running us through so much in such a little time. It's clear you're an expert. It's clear why we got you on the show. So thank you so much.
Oh, thank you. Thanks for having me.
Cheyne, thank you, as always, for co-hosting with me, having a chat.
It's always great to be on with you.
Beautiful. Just a quick reminder that the following program is for informative purposes only, team. Always do your own research before making any major financial decisions. And this program, of course, was brought to you by the team at Crypto Calls. And this is Ticker. We will be right back.
You're watching Ticker. We'll have more in just a few minutes.